Time for a quick stock market review from MacroOps, our global macro research and consulting firm. And as you can see here, markets are pretty rough right now. It looked like we were going to get a nice rebound after the Fed meeting, even though it was super hawkish. But we got the rebound and everything just turned around real quickly. And now we're hitting even lower lows. So we were thinking it was going to hit the 4,587 level, which was the December open. But as you can see, it already sliced through that. It's at 45.26 right now. Now I am recording this in the middle of the day Monday, so we'll see where it actually closes. But the market will likely fall even further to test the November lows, or the lower Bollinger Band, and that's a little bit above 4,500 total. So as you can see, it's pretty much already happening. Now keep in mind though that we are still in a larger bull market, so this will likely be a dip that's bought. And short-term sentiment is already setting up for a potential bottom, and you know we track sentiment to see what people are feeling, because if they're super bearish, that likely means that the bear move is over. So as macro charts said, everyone has a foot out the door. Option traders are again among the most negative in history. Most signals like this led to market bottoms or rally extensions. And the signal he's talking about is here. So when options flows gets negative, like they are right now, we usually get a turn upwards in the market. So it's like a contraindicator. When people are super bearish, market will go up. So the story of 2021 is a historic rally fueled by doubt, shakeouts, and panics. A textbook bull market. So get ready for 2022. It has definitely been a tough market this year. The Omicron variant is probably going to be in the news a lot this week. So this looks to be way more contagious than the previous ones. But we got to wait another week or so to see if we actually get hospitalizations and deaths out of it. Or did we get enough booster shots and vaccines that we're all okay? So you can see here Omicron is now the dominant variant in London, and cases are the highest they've been in the pandemic. So in London, they now equal the peak level from last year. But again, the question is, are we going to get more severe outcomes from it? Because you can be sick, but that's very different from being in the hospital, not being able to breathe and dying, right? So what we're hoping is that this is like a cold now. And so far, the data out of South Africa has been promising. The most recent wave already looks to have peaked, and hospitalizations and deaths have stayed muted. So that's really good news. So you can see right here, the peak has already happened in South Africa, and deaths didn't really spike, which is great news. That's this red line right here, and the cases are the blue. So lots of cases, but not as many deaths. If we look at bonds, Sentiment Trader recently pointed out the excessive bearishness there too. We recently hit the bottom 2% of all readings, so that's this blue line right here. And after hitting these levels, bonds have shown a strong bullish bias over the following months. So again, sentiment, right? Contraindicator. So if it's really negative, you see prices go up. Another thing to watch are small caps. They're knocking on their 11-month support level right now. So break below that level will be the start of a broader risk off period in markets. And yeah, it might be breaking below today, but we don't really know for sure until it closes. And yeah, it can close below and then bounce back up towards the end of the week. The best closes to look at are not only the daily, but the weekly. That's the best signal. So we really got to watch what happens here. And if that breaks and holds, then yeah, look out below for all the indices. And whether it's the rising dollar or COVID concerns, oil looks like it's headed lower over the short term. Brent's 12-month time spread is leading the way down. So oil prices are falling. And that's pretty much it for this week. If you have any questions, feel free to email us at ak@falliblemoney.com, and make sure you sign up for MacroOps so you can get this stuff directly to your inbox. Do that, and I will see you next week.